Good afternoon. Thank you. Sorry about that. Chris Millward, and I'm MEGA's Head of Financial Institutions. I'm very pleased to be here today. MEGA, you may know, is the arm of the World Bank Group that provides political risk insurance and credit enhancement guarantees to investors and lenders in emerging markets. And banks are very important users of those guarantees. And in fact, of the $6.4 billion of guarantees that MEGA issued last fiscal year, $3 billion of those were issued to the financial sector. And further, half of our climate finance has also been contributed by our banking clients in that same fiscal year. Now, you may know that 85%, we have a target that 85% of MEGA's projects be aligned with the principles of the Paris Agreement. And starting from July 2025, 100% of those projects need to be aligned with the principles of the Paris Agreement. What this means is that every project that MEGA supports needs to be assessed in terms of how it contributes to a country's pathway towards low greenhouse emissions and climate-resilient development. Ensuring alignment between MEGA's commitment to the Paris Agreement and the bank's own net zero plans and climate risk assessments is therefore a very important part of our overall partnership with the financial sector, particularly since we are working in emerging markets, and a bank with different business models and operating in different parts of the world may have slightly different trajectories in order to meet their net zero targets. So we're here today to learn a little bit more about those net zero targets, and I'm very happy to welcome Nathalie Jaubert, the Deputy Head of Corporate and Social Responsibility at BNP Paribas, Gerard Fouget, Executive Director of Asset and Project Finance at First Abu Dhabi Bank, and Mbombo Luhembe, Head of Sustainability Analytics at ABSA, and Alan Gomez, Head of LAC's GFANS Operations. So if I may ask Nathalie, you first, maybe you can tell us a little bit about where BNP Paribas is in your net zero journey.
Yes. So for those who don't know us, we are a bank. We are operating in 70 countries. We are a commercial bank. So when we signed the Net Zero Banking Alliance and when we decided to align our portfolio with net zero target, we had this question: what does it mean when you are a commercial bank, having a retail client, corporates, financial institutions, sovereign? So how can we handle that? What we decide is to cut this huge problem in smaller problem to have a chance to find a solution. And the smaller problem is we decided to work on a sector-by-sector basis. The idea behind is that we are looking to have an alignment on a sector-by-sector basis in order to be able to discuss with our client a language that they understand and that is meaningful for them. So when we decided to align, we decided to be very public and very transparent about what we do. So we have a timeline. We cover 3 sectors during the first year: power, oil and gas, and automotive. 3 other sectors the second year: cement, steel, and aluminium. And we will cover this year real estate, agriculture, shipping, and aviation. Each time we publish what we call a climate report. The name may change over time, but with the starting point, where are we today? If we take all the clients of their sector, where do they stand compared to the benchmark? The benchmark, every time it's possible, we use the International Energy Agency benchmark because we want something which is updated every year and which is public and science-based, of course, and our trajectory. And every year, we will publish an update explaining if we are on the trajectory or not. And it may happen one year for market reason or whatsoever that there is a bump, but it's important for us to have this meeting with our stakeholders to publish every year. So as of today, we cover 6 sectors. We have more to do, but what we learn on the way is that every time we discuss with a client based on this criteria, we learn a bit more about the sector. So there may be a loop in the fact that we may need to improve some of our criteria, some of our analysis over time. So even though at the beginning we thought it would be a 3-year project and then something smoothly going on, probably now we have this feeling that we will have to rework on every sector to improve and be able to have a meaningful discussion with our clients.
Yeah, no, thank you. And that makes sense following the sector-by-sector approach. Tackle the important sectors first. And I know that, Gerard, at FAB, you've been developing a sector approach as well, and you've had a couple of announcements ahead of the COP. Maybe you can talk a little bit about where FAB is in terms of your journey.
Perfect. So thank you, everyone. Happy to be here. And before I start, I think it's important for all of us to understand that for banks, obviously, to apply these transition plans or to reduce our emissions, finance emissions is very, very easy. I mean, at the end of the day, we can stop financing all of these intensive sectors, but this is not the reason why we are here. The reason why we're here is to support our clients to transition and obviously to support the economy as a whole. Okay, so in this way, how FAB has been approached is not so different than what has done BNP Paribas. At the end of the day, we're following the same guidance, we're following the same standards in the market. Net Zero Banking Alliance, we joined back in 2021. Then we joined PCAF, which gives us the methodology and the understanding on what we have to do. And as BNP Paribas has done, we have different ways to understand how we're going to tackle these sectors. We need to focus initially on the most intense sectors that they are generating the higher emissions. On the first wave, First Abu Dhabi Bank tackled 80% of the corporate emissions by 3 sectors: aviation, oil and gas, and power. We have the roadmap to decarbonize until 2030. On a yearly basis, we'll be publishing also if we're on track or if we're not on track. And wave 2, November this year, we publish an additional 5 sectors, which are cement, commercial real estate, agriculture, aluminium, and steel. The pathway is moving forward, and obviously it took us 2 years of full exercise, proactive engagement to understand what the clients are doing, how they are going to decarbonize, and what levers we can provide to them for them to achieve this decarbonization and net zero commitments that they have on the table on 2050, but most important also, how they are going to advance during the next years until 2030. Regarding the targets that you were mentioning, Chris, it's important to highlight that FAB was the first regional bank to put a target in the table back in 2016 when FAB did not even exist. It was National Bank of Abu Dhabi before the merger, that they will facilitate $10 billion. And after the merger in 2021, they established a target to facilitate up to $75 billion on sustainable financing, which captures either to financing use of proceeds project, for example, or renewable energy projects, but also incorporating KPIs to our clients that are material and help them to decarbonize. And this year, the bank has increased the target from $75 billion to $135 billion up to 2030. It's a big achievement, and it covers 50% of the Central Bank of UAE target in terms of mobilizing sustainable financing. Thank you.
Thank you for that. We're going to have some more questions when we're going to dig into this a little bit more. But in Bombo, maybe MIGA and ABSA has partnered for several years, and we've been on our journey together. But I'd love to hear from you in terms of ABSA, where ABSA is in defining your net zero strategy.
Thank you, and thank you for the opportunity to be here. For those who don't know, ABSA is a Pan-African bank. It's present in 10 countries in Africa, and its headquarters in Johannesburg, South Africa. We officially started our journey by joining the Principle for Responsible Banking in 2019. And last year, we refined our ESG strategy by defining the key pillars of the strategy, which is obviously climate, financial inclusion, and diversity and inclusion. And you will see that I've used the word inclusion twice. It's because being a bank that is headquartered in Africa, a Pan-African bank, climate and social impact are not two different problems. They have to be tackled hand in hand. In terms of our strategy, therefore, and net zero, we have, it has many layers, focus on the consumer, SME, as well as corporate and government support. On the consumer side, for instance, we launched the first green bonds in South Africa, whereby we encourage consumers to take a bond with, and buy houses with reduction in energy. And the same with SME. We finance the SME. And with our corporates, we incentivize them by linking our pricing of our loans to target setting. And with government, we are a big supporter of what is called the Renewable Energy Independent Procurement Program in South Africa. And to date, we have financed over 3 gigawatts of energy. That is quite important. And then in terms of our net zero journey, we started with baselining, very similar to what the other bank has done, because we use similar frameworks. It's about sector by sector, it's about baselining, and it's about target. So very similar, and we are continuing. We started with coal, oil, and gas. You will know that South Africa uses a lot of coal at this point in time for energy, so that was very important for us to start a decarbonization journey on that sector, and oil and gas are also priority. So that is where we are in terms of our journey.
Okay, no, thank you. And just turning to Alan, at GFANZ, you're working with a lot of banks and providing advice and support on the transition plans. And these things are complex. They're not easy, and they require a full institutional effort and support. And maybe you can talk a little bit about what GFANZ is doing to support these financial institutions.
Sure, Chris. Great. You hear me, right? So thank you to the World Bank, and thank you for all of you that are here. So yes, I represent GFANZ, the Glasgow Finance Alliance for Net Zero. We were created back in 2021, and the objective of GFANZ is to work together and to unify all the efforts from the financial sector into the low carbon transition. That means that we work with institutions like this and asset managers, asset owners, venture capital, financial service providers towards the net zero agenda. Under that scenario, we are working right now with 8 alliances that are under these different subsectors of the financial institutions. We have around 675 financial institutions that right now are into this journey, and some of them may be starting, some of them may be already advanced, but we want to work with everyone, so we encourage all financial institutions to join the journey. Now, under this scenario, what we noticed is that there were plenty of work being doing around the general aspects of ESG. There was also a lot of people working on TCFD, for example, on climate risks, and obviously now with TNFD and biodiversity. The part of the risks was starting to be covered, and the adoption was growing, right? And I think the best answer to that is, or the reference to that is that TCFD now is passing the torch to ISSB on climate risk. But in terms of transition planning, there was not so much work done. So what we are doing is that we are helping to build that climate finance architecture around the opportunities, around the transition. So into that journey, we started working into a net zero transition plan and a definition of what does finance transition is. The transition plan basically is, as you heard from my colleagues here, is a set of activities, of goals, of accountability that frames and that helps the financial institution to achieve a net zero target. That means working again on the opportunity. If you see again, climate risks are covered with TCFD. Now the part of the transition is covered with the benchmark that GFANS has released. Under that work also, we have a journey that we can say it's applicable for these financial institutions where they have to work in 5 different pillars. Again, similar to the work that TCFD helped to pave. It's about the governance. As always, we need the governance. We need the highest level working and understanding what is the climate, what is the risk, but also what is the opportunity. We need also, again, metrics and targets around that. We need KPIs to achieve the financial transition goals. But the most important, I think, for a financial institution to understand, it's about how to engage with their clients, how to talk to them, how to work also, not just with the clients, because the clients can have a part of the solution, but it's not all the solution if the government, for example, is not aligning to that journey, right? If there are no clear transition pathways, NDCs for the country, as well as for the financial institution and the real economy, in steel, in cement, in oil and gas, and so on, then there will be a disconnection, and the financial institutions will not feel comfortable lending money to a sector that is not into that conversation, right? So that is one part of the pillars that we have on this transition framework. The other one is about the implementation, is how you get from that engagement into products or into lending or into investing. And that is a work that is done again by finding the correct products, the correct services that can fit into the previous agenda that is needed on the engagement. And how do you embed that into decision-making, into policies within the financial institutions. When you have that, you have basically a transition plan that is working for you, that is working for your clients, and the economy towards the real economy.
Great. No, thank you. That's a fantastic overview of the framework on how a sort of transition plan should be played out. And I think to me, it really goes into the complexity of the process and how all-encompassing it is, both from at the governance level to at the very granular level in working with clients, and the nexus between what the financial sector, what the financial institution is doing, and how it relates to the real sector, and the partnership between the financial sector and the real sector, and how they work together is really important. The one thing is, in terms of just drilling down a little bit more in terms of the regional context, and also in terms of business models. Each bank is working in a different region here. We have a good subsection from the Middle East, Africa, Europe, all of whom have subsidiaries and operations throughout their respective regions. And they also have different business models: asset management, investment banking, retail operations. So I would love to hear, Natalie, maybe you could talk a little bit about what you have seen as the challenges that you face as you develop your transition plan, given your particular regional context and stakeholders that you have.
So for us, we are mainly a OECD bank, but we are in a lot of countries, so we had several challenges. The first one is very basic. First challenge was to have our relationship manager discuss everywhere in the world the topic of transition and sustainability. So at first we thought that giving guidelines would be helpful, and so we draft something, but after several interactions with them, we discovered that they need much more than that, and that they really need a training to be able to have that discussion. They are trained to discuss risk, margin, guarantee, legal, everything, but they were not trained to discuss sustainability, and they felt very uncomfortable. So we have what we call the Sustainability Academy, where we have trainings for different levels, basic for everybody in the bank. even if you're in risk or in the commercial part. But then if you're in a sector with specific challenges, you have access to a global overview of the sector. What are the best players doing? What is the average doing? And try to identify where your clients are. So first challenge was, even before having this implementation on a sector-by-sector basis, giving people the tool to be able to have the right level of discussion. Then another challenge was, how can we implement something at global level, knowing that each business line and each country may have different constraints. Those constraints can be either cultural. I mean, there's not the same pressure on transition everywhere in the world. And even if there's pressure, it's not worded in the same way. So you need to adapt. In some sectors, in some business lines, it may be quite easy in project finance, for example, because you exactly know what you finance to have this discussion. But what do you do if you're in trade finance, for example, or in corporate finance? So that's what you were mentioning. You also have to design specific product and adapt, for example, your loan and be able to know what are the meaningful KPI for each loan. So all the story at the end came to the fact that we need to have a global structure which will summarize and really monitor what we want to do. So we build that, but in the same time, something quite flexible so people can adapt to their local situation where they would be able to do. So we have this global structure. It's based at the headquarters office, but it doesn't mean that each and every client has to follow the KPI by the book. It is understood that some will begin better or worse than average, and that what we are looking for is really the dynamic of the transition, not being at this every year with the same reduction percentage, for example. So it gives more complexity. It was it was more difficult to implement. I thought it makes also bankers' life more interesting than just applying the KPI, and it gives, once again, a much more interesting discussion with our clients.
Yeah, no, interesting. So in the end, the destination is the same.
Yes.
But the route, the trajectory may be a little bit different depending on the business lines, depending on different areas. And then you would tailor those particular areas relative to their capacity and relative to their different business models.
Yes, exactly. So overall, what we want to do is to see a change in the business model.
Yeah.
So we do have defined a KPI, for example, for fossil versus renewable. Today we had 60% of renewable, 40% of fossil.
Right.
What we want to have is 80-20, which does not mean that every client will be at that 80-20 balance. That's not possible. Some clients will still be heavily fossil, and even though they're diversified, they could not reach this target. Still, it's a global target, so we also feel it gives a kind of internal momentum to be part of it.
Yeah, no, thank you. And Gerard, so you're working in the Middle East. I can imagine there are a lot of challenges that you face to get to net zero, and maybe you can talk a little bit about what you see as some of the key challenges that you face on your trajectory.
Perfect. Thank you, Chris. And as you say, yeah, I mean, there's so many challenges, but I believe that as many challenges as we can find in another regional and in another region also around the world. See, before I came here a year and a half ago, obviously, before taking the decision, I was like, oof, going to the Middle East, oil and gas is going to be very challenging, and working in sustainable finance. So my first initial reaction was like, no, guys, I'm not going to come. Quite comfortable in Europe. We're doing the things. We have a taxonomy, so I avoid to come. But later, obviously, I took the challenge, and I thought, why not? Okay, why not to come to the Middle East? Why not to explore and to understand what the companies are doing here? And to be fair, I have been very surprised on how the companies are evolving, specifically the big conglomerates and the big groups have been evolving on the past years here in the region. As I say, in terms of challenges, most of them are pretty similar than the ones that we have around the world. Lack of standardization in terms of reporting. So from our perspective, when we're trying to analyze a client to decide either we're giving them certain loan, we participate in certain project financing, so on and so forth, it's very hard to understand what are going to be the inside risks that yet we are not able to evaluate or to put a pricing on them. So this is one of the most important challenges, and I hope that through ISSB and other standards that are going to the market, but hopefully one around the world will help us to take these financial decisions and create decisions to decide what clients do we support and what price, and obviously we'll be able to price the risk that they are behind that we cannot currently evaluate. Second challenge, and basically this not happens quite often now in Europe because you have more of a regulatory perspective, but here the regulation starts evolving. The market starts speaking. Central Bank of UAE has done many consultations with the banks, but also with the listed companies to try to identify the climate risk that we have, to try to see what are going to be the levers. And they need to standardize that and put a regulation in place. So obviously the companies are going to be able, and the banks, we as financial institutions, we're going to be able to identify all of these aspects. The training aspect is very important, as Natalie was mentioning. Obviously, if you want the people in the bank who are covering the clients to understand what risks and opportunities the clients have, they need to understand what is really happening. The speed on update that we have currently in terms of ESG and new technologies that are appearing is so fast. So we need this update on training for our coverage people to be able to understand. And finally, and one important part that relates to the credit perspective also is sometimes the banks we utilize, well, sometimes no, most of the time the banks we utilize a certain way to analyze our clients. If we do not understand the technical aspects, if we don't understand the evolution of the new technologies and so on and so forth, this is going to be quite complicated to support the climate transition, the climate adaptation. So in that regard, obviously, collaboration with all the stakeholders is critical and very important. And finally, in terms of the SMEs, I believe that this is the niche of the economy which represents so many companies that they do not have the resources like they do international and big companies to hire people to start establishing their strategies. And between the financial institutions, the regulators, and the big clients that they are supplying, we need to engage with them and obviously take them and help them on this transition that they need to happen.
Right, thank you. We move to Africa. So ABSA, obviously, big operations in South Africa, but ABSA has operations throughout the region, significant retail and investment banking operations throughout the region. Obviously, we have to take into account the just transition, and that creates a necessity to ensure that there is equity and continued growth. So how is ABSA sort of managing this, and what are the challenges that you face in developing your plans?
Yeah, thank you so much, and I'm glad that you already started mentioning just transition. I will start by saying that, yes, the challenges are both external and internal. From an external point of view, it is managing the nice spot or the right spot about the society, the impact on society, the impact on climate, but still developing Africa, which is the least contributor to the emission worldwide, but have seen significant impacts of climate change. It is about taking that, making the decisions that are important for the development of the economy, important for the community, but also important for the climate. So it is about finding the right balance between all that and putting in place policies that will enable us as an organization to manage those different tensions when we are demanded to make a decision. But at the same time, internally, similar to what my colleagues have just said, there is the challenge of creating a shared understanding of what sustainability is. And therefore, we need training as well. We need to be able to, as an organization, to understand a similar topic together. And it's also about data. Data is critical. It is linked to reporting. Sustainability is a non-financial report about non-financial information, which is information that normally banks have not been collecting the same way as financial information. So it is about finding those information. It's about validating those information, because we all understand also the risk of greenwashing. So we have to be responsible in what we report. And therefore, it is about making sure that we get the information not only from our corporate client, but also from our SME client. So the information, as mentioned by my colleague here, corporates have put in place they are on their own journey, so they are able to source information. But what about the SME? And in the continent where we operate, there is a lot of SME. So data is therefore quite an important challenge that we have. And it's about augmenting the capability on sustainability within the bank for decision-making and integrating decision-making on climate in the decision we take on a daily basis, be it when we choose a supplier, be it when we find a customer. So it's not about financing only, it's about the way we operate on a daily basis. So that integration on its own, it's a big effort that the bank has to take. But we are, that's what I said at the beginning, we are making sure that as we integrate and embed ESG, we don't only consider the financing aspect, but aspects such as supplier as well into our target setting in terms of the supplier, making sure that they, on their side as well, are following a sustainable framework. So it's about that taking our customer and our community along with us.
Exactly. No, thank you. And maybe, Alan, it's been really interesting to hear the different perspectives from the different panelists. Just from GFANZ's perspective, you're working with these banks globally. So maybe you can offer a few insights in terms of how GFANZ adapts to different regional needs and different stakeholders. And obviously, different banks will have different types of transition plans. And maybe you can talk a little bit about your work globally and working in different regions in that respect.
Sure. My pleasure to talk about that. And I think, again, hearing my three colleagues here to speak about their experiences, it's precisely one of the reasons of GFANZ having these regional networks. Because there is something that is happening in Asia, there is another thing that is happening in Africa, another thing again in Europe, and we have a different perspective also in Latin America. Like you said, for example, Latin America is 8% of the emissions globally. It has a role, but not the main role, right? So we are also vulnerable as Africa. So we need to understand which role has each of the regions in the decarbonization route if we want to help them to growth and if we want to help them to drive this transition into their economies. So that is why we have these regional networks. We launched the first one in APAC back in June 2022. Then in December 2022 also we launched the African network. And recently, 1 month ago, 1.5, we launched the Latin America network. And what we want to do is understand that. So in the case of Asia, for example, the energy matrix is more related into carbon, right? So they are trying to phase out carbon. They decided that they need to do that. In the case of Africa, they need to understand what are the, how can they access into finance for solutions for the people, for the local companies. In the case of Latin America, we are going to understand that because we are in the middle of that process. But it's really interesting what you said from Africa, because Latin America also, for example, has most of the economies based into SMEs, right? So it's a different perspective what a private bank can do and what a retail bank can do. And again, that is what we need to understand. Now, when we have all these financial institutions working with us, we work, and that is something relevant for you to know, that we work through the Net Zero Alliances, and we work through UNEP-FI, through PRI. So we are not double doing work here. We are helping to unify the conversation and to do the same work but to fulfill different perspectives. So some of them will fulfill just the PRBs, some of them will fulfill the Net Zero Alliance, and some of them will fulfill the transition plans. But the idea is to work together again. So we help them on capacity building. I told you previously that we help also globally on the climate finance architecture, but that must be replicated locally, regionally and locally on each jurisdiction. That's right, because if we don't take care of these different regulations happening around the world, there will be a misconnection with everything that we are talking here, right? So we need everyone to speak the same language. And then we also work on this understanding of what are the differences of each region, so we can try to help to mobilize capital into what is needed for each of the regions. So basically, that is how we work. And some of the work that we have been doing, you can see it in capital finance platforms. For example, the JETP, the Just Energy Transition Pathway, that is happening in Indonesia, and another one in Vietnam. There is another one in Senegal, for example, right now. And so on. And we are understanding if it's possible to make one, for example, in Latin America. No?
Thank you for that. And what's interesting is that, on the one hand, when it comes to the climate risk disclosures, and TCFD has been a very important platform to develop a standardized approach. When it comes to transition plans, they can be variable depending on the different banks. And so we've only got 5 minutes left, I'm afraid. But just very quickly, just would be interesting to understand when it comes to the mitigation side, the net zero side, what kinds of discussions you've been having with regulators, financial supervisors, and what interest they're showing in how your bank is developing your transition plans. So maybe, Natalie, you could talk a little bit about that. 2 minutes, I'm afraid, but I know it's a big topic. But
so, because we are a European bank, we do have the European regulation, which is putting a lot of emphasis on climate and a lot of emphasis on transition. Their first step is really around disclosure. Try to understand what's inside our balance sheet in terms of sector, in terms of top clients, so they do have lists, and the idea is to increase the level of disclosure. First year, you disclose the amount. Second year, you disclose the emission. Then you disclose the transition pathway. And the other part of what the regulator is doing and is putting pressure on is around stress tests. They really try to figure out what does this climate transition will mean for our balance sheet in terms of today transition in different scenarios. So I don't know if you're familiar, but they have scenario 1.5 degree align, orderly or disorderly, and they also have scenario that they call hothouse scenario, so if we are not aligned. As of today, it was really on mitigation, but we know that it will come also to a physical risk analysis, and what does it mean if we do not reach the target in terms of impact on the balance sheet. So that's a whole new sector we have to discover with them, because we do have a lot of discussion with academics, because it's very important, I guess, on this to have a real cooperation, because nobody exactly knows the perfect solution. So we have discussion both with regulators and academics on this subject.
Yeah. Thank you. And thank you for keeping it short. I appreciate it. Maybe, Gerard, your perspective.
Yeah, from our side, I mean, we're not as evolved here in the region as much as they have in Europe. But obviously, we have seen an evolution, a positive evolution during the past 12 months. We have seen how Central Bank of UAE they have been engaging in a positive way on several consultations to understand what are the main concerns for the financial institutions and listed companies in terms of climate risk. They have requested to the banks that they have more of an international footprint, like First Abu Dhabi Bank in our case, to make a simulation of a stress climate test in that way, and to identify what are the key parameters, what are the key sectors, and so on and so forth. And obviously, they are encouraging, and you can look at the reporting from the several banks here in the UAE, on all the banks moving towards reporting under TCFD, and hopefully aligning on the same way to report, so the central bank would be able to identify what we have been reporting.
Thank you. And then Bombo, maybe from your perspective, whether you've had extensive interactions with your sort of regulator.
Yes, definitely. Being listed on the Johannesburg Stock Exchange, the South African regulator is definitely the one we are interacting with. Climate has been top of mind for them. It is one of their, what is called in our environment, flavor of the year, whereby we have to prepare a paper for the regulator to inform them as to how and what we are thinking about the climate and answering some specific questions. Definitely the questions were around risk management, the impact on our customer and how we're handling it, and also our own transition, where we are. So top of mind, not yet with regulated in the term of requirement, in terms of what we have to disclose, but very much a subject that we are engaging with our regulator.
Right.
On.
Okay,
Yeah.
no, thank you. And Alan, maybe very quickly, I'm just curious from your perspective. I imagine, GFANS is looking to develop certain standards. How have you had interactions with sort of financial supervisors in order to perhaps align what their expectations might be? Is that part of what you guys are looking at as well?
Yeah. Hi, can you hear me? No? Hi, there. Yes, definitely it's part of the work that we do. When we have all these financial institutions that would like or are in their path to integrate low carbon emissions into their portfolio, we become kind of a representative of them into these type of discussions because, like I told you before, we need for the climate finance to flow, we need a harmonization of the regulations and a coordination with the real economy and with the financial sector. So there are these three relevant aspects that we need to take care. So in certain sense, if you don't have, for example, the entire economy reporting on transition, what are they doing, how the banks can take that information and take it into account to make this different climate finance, right? So we work on that. Okay, don't get angry with me. It's general, we do that. So we work on that, so we give some advice to the regulators in order also, for example, to coordinate and to integrate what is transition finance into the taxonomies, for example. In the case of Latin America, taxonomies are emerging everywhere. And we would like that every taxonomy can have this and recognize this transition that you were talking about, right? That if the transition doesn't recognize, if it goes full into the green, which we want to go into the green, but we need to recognize that we need an orderly path to do that, right? Otherwise, we will create holes in the economy, and we will not make this just transition for everyone. So we need to help to coordinate that agenda. So we do have this, and we have different interactions around that.
Great. No, thank you. I think we've run out of time, but my sense is that we're at a really quite important moment, to be honest. A few years ago, we were talking to banks. They were setting targets with all their net zero targets, and we're now really getting into the meat. And those transition plans that are being developed, that are going to be released, are really going to make a huge difference and cause significant shifts in the industry and portfolios. So I really appreciate you sort of stepping up and talking a bit about your plans, and please join me in thanking our panelists. Thank you very much.